Oi!
Larry, great to finally meet. I can't believe we haven't met before. We've got so many friends in common. And for you to come here from Panama to the Cayman Islands, so from one Caribbean paradise to another, you know, it's great to finally meet and get you on camera.
Now I know why more people come here in the wintertime. They love Grand Cayman in February. I mean, God bless it.
Yeah, exactly. You know, who wants to be in New York? So, look, I'd love for you, people have seen you on Real Vision and seen you express some of your ideas, but I'm not sure they know who you are and some of your story. So I'd love for you to give some of the story of what makes Larry Larry and where you've come from in your career.
Well, I grew up on Cape Cod, and but just before that, it was up toward outside of Boston, Bolton, Massachusetts, and very tough divorce. And I went through as a child. My parents, I think we were in probably 6 or 7 schools in 8 years, and then finally, we went from very countryside living to living in a housing project through the divorces. And as a young man, I really learned how to appreciate money, hard work. And finally made it into UMass, kind of came up through the bootstraps, public school systems, and started off my career that way. And it's been very challenging, but I got our first break years later, which we can get into.
Yeah, you told me about this off camera earlier. So you graduate and then you want to go to Wall Street.
Want to get into Wall Street, and I think I had 155 no's from every single...
Yeah, I was there too.
Yeah.
We talked about, I've got a drawer still full of them.
And the motivation, and to me, life is about really that burning desire to break through those walls. I mean, nothing's given to you, and you have to go get it, and you have to really have that burning desire vision every day. And I couldn't figure out a way, but there's always a way. If you can't get through the door, you got to climb in through the back window. And Doyle Bronson used to say. And I tried to get into Merrill Lynch. After like the 7th no, I snuck my way in dressed as a pizza delivery man.
For real?
Yeah, in Philadelphia. I mean, Boston, I'd struck out so many times, so I tried Philly. And I was thrown out of the building. On the way out, one of the senior producers of the firm, Gary Begnaud, grabbed me and brought me back, and he brought me into a room with 5 or 6 big producers, and they said, Larry, we'll give you a job, just you got to go sell something for 6 months, prove that you can build relationships with people. And I'm like, what am I going to sell? And the guy said, pork chops. And so I went back to the Cape and Massachusetts for 5-6 months, put up some decent numbers, and next thing you know, they gave me a job.
Selling pork chops?
Selling pork chops.
But how did you start selling pork chops?
I just worked my way into one of these, I think it was American Frozen Foods. And it was during the S&L crisis. And
Right.
We're talking about trying to get a job in finance, coming out of school with hundreds. The Bank of New England went out of business. I mean, Bank of Boston was on the verge of filing. So the whole area of New England was really near depression.
Yeah.
And so I just made my way through the back door.
So then after Merrill, so where did your career go from there?
I was on the retail side for a couple of years, and really always wanted to be into that major leagues. To me, I wanted to get into New York and work on the institutional side of the business.
Yeah.
And that just fascinated me. And I had my good friend, Steve Seefeld. He and I were talking about a vision for bringing convertible bonds to the web. And this is like in the mid-90s. And we started a website called convertbond.com. We were lucky enough to have CNBC do a couple of segments on us.
So that was very early for websites.
Yeah, it was late 95-6. Yeah, that was just the early construction of it.
Yep.
But by the time we sold it to Morgan Stanley, it's October of 99. And if we had waited, we sold the company. This was the largest, most successful convertible bond research, potentially trading platform in the world. And Morgan Stanley bought us in October of 99. And I often say if we had waited for the next bid, we never would have gotten it, because the market collapsed in 2000, and God bless Morgan Stanley.
Yeah, top tick in the market, because it had a .com at the end of it. So after that, after you sell convertiblebond.com, what happens?
Well, I stayed there. It was a very nice quality of life. I'm in Connecticut and New York running the convertible sales. I'm running really the website for Morgan Stanley. Probably stayed there 1 or 2 extra years. It was very comfortable. But always wanted to make it onto the trading side. And to me, that was really where I wanted to be. And once again, if you can't get through the front door, you're going to come in through the back door. Or the window. And I convinced Larry McCarthy and the team at Lehman to give me a job trading convertible bonds, high yield bonds, distressed bonds. I made that was my big break, making it from kind of on the sales side, research side, into trading. And that was probably the biggest break in my career.
Okay. And so what kind of convertible bonds? So you're now in New York trading. What kind of strategies are you looking at?
Well, it's really distressed converts, high yield converts, because what we realize is that businesses, when you work on a big bank, you have the equity division and you've got the fixed income division. And most people don't realize that a lot of these divisions don't like each other. And so there's a lot of back then there's a lot of miscommunication between divisions across the street. And so my job was to really work with both sides and help bring bring convertible bond markets to clients around the world, but also make sure that our teams on all the different floors in high yield, distressed, and equities were on the same vision.
So explain to people, because some people won't understand what a convert bond is, because it's the hybrid nature, and when you're doing distressed convertible bonds, you've got multiple hybrids here. So explain to people what that is.
Well, I say in the book, and I wrote the New York Times bestseller about Lehman. It's now published in 12 languages, and one of the parts of the book is about converts. And there's a convertible indicator. If you look throughout the history of corporate capital markets and financing, the repeat entries to the convertible markets are oftentimes the most likely companies to file bankruptcy, whether it be Six Flags or Fannie and Freddie. There's so many different companies, WorldCom, Adelphia, the multiple convertible issuer. It's really the last saloon. So a convertible bond is a obligation of the company. So you sell the bond, maybe a 5 or 10 year bond, 1,000 face bond, and it may be a 5-year term, but you also have a conversion ratio, a certain amount of shares of stock. And what happens throughout the evolution of some companies is they get too much in debt. Companies like Calpine. Calpine had 7 convertible bonds before they filed bankruptcy. And they will come to, it's really what we call the last saloon, that bar at 2 o'clock in the morning when you have to get that last drink. It's the place where a lot of companies can go and finance. And lo and behold, guess who the new multiple issuer is in the markets? It's now looking like the Tesla.
Oh, right, interesting. So again, sorry, just to explain a bit about convertible bonds. So as you say, it's a bond, but it has an equity component. How does that work? Just so people can understand truly how it works.
So you have a 1,000 face bond, and there's a certain bond floor in there potentially because it's an obligation of the company. But you'll have a certain number of shares of stock that the bond converts into. So if the stock takes off, you can have a $1,000 bond go to 3 or 4 or 5,000. In the .com era, there were convertible bonds that went from 1,000 face. So you have a bond that's 1,000, it matures in 5 years at 1,000, but you have a potential of turning that 1,000 face into 5 or 10,000
because there's a call option on the equity.
Yeah, call option. That's a good way of putting it. It's a certain amount of shares, but essentially it's an embedded call.
And it has a strike price like a call.
Yes, it has a strike price.
Of which you can convert
and if you're Buffett, you negotiate the very low strike prices. Buffett's famous for converts. I mean, he convinced Goldman and General Electric during the financial crisis to structure him a private convertible bond that he has between him. It's an obligation between him and the company. He loans the company money, but he wanted that income component, that coupon. That's your income. But you also have a low, in his case, he negotiated a low conversion price. So let's just say the stock is $80, or his convert might convert at say 85 or 86. But in the case of other converts that are issued, a lot of times there's a bigger spread. So it's like, when does that bond get in the money is the question. When can he convert? And Buffett's the classic in that regard.
Yeah. So you're now at Lehman. You're trading. Talk me through the trading at Lehman.
Well, our big break was we had Jane Castle. Jane's now at Avenue Capital with Mark Lazary, and Jane was one of our leading distressed analysts at the time, really an up-and-coming star. And Delta Airlines went into bankruptcy, so we're on the desk, and we were making markets for clients. And I'll never forget the day Delta filed. I started making the bonds at 16 bid, 17 offer, 16, 16 and a half. Back then, pretty decent spreads. And by the middle, late in the afternoon, maybe toward 4 or 5 o'clock, we started to get hit down at 12 cents on the dollar because there was a lot of global competition coming in with price pressure on airlines. There was strikes threatened. The unions were extremely strong back then with the airlines. And so we were trading the bonds, and lo and behold, over the course of the next year and a half, we built up at Lehman a $780 million position between the four of us, four traders in Delta Airlines bonds. So
how many bonds were in issuance?
I think they probably had $3 or $4 billion in debt.
Right. Okay.
So we owned a good chunk of them.
Yeah.
So what we would do was we would make the markets for the clients, and so we had a sales force that would make the markets for the clients. But back then, Wall Street banks were allowed to hold large amounts of inventory of bonds. So we had a number of bonds that we were able to, what we call proprietary trading.
And so then in this whole story, you end up writing a book about Lehman. What was the book called, and what
Sure.
and why did you write it, and what happened, the timing of writing that book?
Well, to me, Lehman was never rotten at the core. That's where all the beauty was. She was rotten at the head. I mean, to me, Lehman was 24,992 people making money and 8 guys losing it.
Right.
And it was really about watching some of the people I loved and cared about, lives destroyed, that inspired me. But in the summer of 2008, thank God I had the vision to pitch. A good friend of mine, old family friend, I think he has a place here in the Caymans, Patrick Robinson,
Right.
had just written Lone Survivor, which was a #1 New York Times bestseller, became a movie with Mark Wahlberg. And it was about the American hero Marcus Luttrell from Texas. And Marcus was one of 4 Navy SEALs in Afghanistan that finally survived. And it was an incredible tale of heroism and surviving and inspiration. And I read that book, and in the summer of 2008, we were up on Cape Cod. It was a beautiful night, 4th of July. The fireworks had just gone off. We're sitting at a table of 8 or 9 people. And I start to pitch very gently Patrick on thinking about a Lehman book. And the whole table starts laughing. I was the laughing stock of the table because I quickly learned that throughout the summers on the Cape, everybody pitches Patrick a book idea. Right. I mean, it happens like every night. And he said, Larry, please don't disturb me. I said, I'm working on Shimon Peres's memoirs. He says, I'm booked until 2000. This is the summer of 2008, because I'm booked solid till 2010. And as the old salesman in me, you never take no for an answer. There's always a way.
Yeah.
There's always a way to find and get that direction to what you want in life. So I said, Patrick, do you understand something? And the whole table was quiet. I said, if this bank goes down, it'll be bigger than Enron, WorldCom, Adelphia, and even General Motors combined. And I'll never forget, he had that Chivas Regal on the rocks. He held it there. And for maybe 3 or 4 seconds, it felt like an eternity. And he said, by the stroke of midnight, 2008, Lawrence, he says, if that bank goes down, you have a deal. And sure enough, here we are, September 15th.
Not long afterwards.
Yeah, September 15th, 2008, Lehman goes down that night. I woke up about 2 in the morning. As a former distressed trader, I tiptoed over to the computer. And as a former distressed trader, high-yield bond trader, a lot of times through my career, I went over to that computer in the middle of the night. I'm looking for the bad news.
So were you working at Lehman by this stage, or you'd left?
I just left.
Right.
But I had a lot of my, what were called restricted stock units. You couldn't sell these stuff. You could try to hedge it. We try to hedge our position, but it had a lot of stock. And it was really a life-changing moment when I saw that Lehman had filed bankruptcy. And I was holding my wife there in the middle of the night in the living room. It was a very tough, dark time. And I said to myself, the next morning I called Patrick and I said, I had a chip to call in. I said, leave it. He said, Larry, come on over here tomorrow night for dinner. And I said, you're on the other side of the Atlantic Ocean. He was about an hour and a half outside of London in Berkshire. And the next morning I found myself on the tarmac of Newark Airport. And as the plane is racing down the runway, 50 miles an hour, 60 miles an hour, 80 miles an hour, 100 miles an hour, wheels up. And I'll never forget sitting back thinking, what on earth am I doing? I mean, I'm a high-yield bond salesman. I'm risking everything. I wanted to bring the unvarnished tale of what happened to Lehman to the world, but I was terrified. And
why were you terrified? Because of your reputation of slinging a bit of mud and stuff like that? Is that?
Yeah, just of kind of the change in direction of what I might have to say. I'd never written a book.
No.
But as the plane banked toward the northeast, it had rained that morning, and there was some raindrops on the window. And I looked out and I looked down, and there's the green and white of Lehman in Times Square. And I said to myself, it's time to go pick a fight. And it was about reaching out to, because I wasn't a high-level executive, so I needed to have the relationships with the senior people around the firm to really figure out what was happening inside. And as you peel back the onion, if you peel back at the center of the onion, you really get close to the skull and crossbones to see what really happened inside the bank.
So how did you get buy-in from the people within Lehman to do this? Well, they were just angry, I guess.
Well, there were so many of them. And it was a period where a lot of the people were taking some time off and wanted to be with family. So you had that. It's like if the financial crisis didn't exist, then they would have been back to work. So there was a group of people, probably like 50, 60 people helped me put it together. Huh. And they were all, at the end of the day, there was this large group of people that were doing so many good things, and there were so many great businesses within Lehman that had nothing to do with the failure of Lehman. To me, for every dollar we were making, there was one point where our group made close to $2 billion on the short side in 2007 as our group. But for every $1 we were making, they were losing $8 or $9 upstairs.
Wow.
So it's really a lot of lessons there, but it allowed me to change my lifestyle quite a bit. And
so what was the book called?
A Colossal Failure of Common Sense. Was sold, I tell my wife once a month, I said, honey, if we sell 1 million books, we'll break even on our Lehman stock. And I think we're up to about 600,000.
That's a lot, right? In books,
it's a lot. In financial
books,
books,
a lot. Yeah, they do not sell a lot. It's interesting.
And the best part is we've done 140 speeches in 16 countries, and there's certain countries in the world like Canada, Australia that have a large financial component in their economy. South Africa. So we've done events around the world, met some very interesting people, and it's been quite rewarding to go from a bank where you're kind of stuck with this nice group of people and a broader group, but then to kind of take what you've learned, the way you have, which has been so inspiring, take what you've learned and then bring it out to that wider audience and help people.
Yes, you're now writing research.
Yes.
So talk a bit about that, and then we'll dig into some of your ideas and what you're thinking about.
There's no I in team. So we have a wonderful group of people in Washington that we've been working with since 2010, ACG Analytics. And so we have an institutional business where we help people with the Puerto Rico trade, hedge funds, asset managers, Venezuela.
So you're mainly looking distressed?
Well, that's a large component of event-driven. Event-driven research, but also macro. So things like populism with Europe. We have a nice business there where we've really got out. We made a really good call on the euro in January, and the bear traps report around getting short that euro ahead of the Italian elections.
Yep.
And looking for those kind of, really taking the trips. A lot of people, and I'm sure you've seen this on the street, the problem with Wall Street research is when it comes to Washington and politics, they all try to wing it from New York. They don't take the trips to D.C. I'm in Washington 8, 9 times a year. We'll take the clients around the hill. We'll do the trips to ACG. We've done trips to, during the Greek crisis, we did 4 different trips with ACG Analytics into Athens to meet the potential incoming government. Before Argentina, we did a trip to Argentina to meet with some of the new representatives of the Macri team. And that was occasionally, not occasionally, usually once every 2 or 3 years, there's an election, like Brazil.
Yeah.
We've been working pretty closely with the Bolsonaro government, and where you get a game-changing moment that just secular changes all of capitalism in that country. And if you're positioned in the bonds or the equities in the right spots, the profits are just spectacular.
So where are you seeing the opportunity now? If you're looking across the world, whether it's right here, right now, or coming up, where is a regime shift, whether it's how country looks at capitalism,
Well, we're still in the early stages in Brazil. We did a bear traps report in September, which we put up on the Real Vision platform. It was a really nice report, and it got into the amount of capital that's in the public hands, and when you're taking capital within the government and then privatizing it. So you're in the early stages of privatization in Brazil. At the same time, the Bolsonaro government, most of Wall Street, they were convinced that he was as toxic as Trump, right? And that was the pitch, and that he wouldn't be able to get pension reform passed through the legislature in Brazil. And that's turning out to be, I think, not true. And so if they get pension reform done, then you're saving about R$1 trillion of interest for the government. So your credit quality goes up dramatically. Mm-hmm. So at the same time, inflation, for a number of reasons, inflation in emerging market countries has come way down. So that takes tremendous pressure off of the Central Bank of Brazil to hike rates. So what's been happening in the last 10 years is every time Brazil's economy gets cooking, inflation picks up, and the government, the Selic rate, what they call the number of rate hikes, vicious, that really knocked the fire out of the economy. And now,
and there's a lot of credit in Brazil, household credit and private sector debt,
that's another element of it. They're in probably in 1950s were the U.S. in terms of really the development of household credit. There's some household credit, but it's really not as wide as I think like in America. So if that household credit situation expands and improves and works its way through the economy, at the same time you have the central bank that is more in control and not aggressively hiking. And at the same time, you've got this political element. I think Brazil equities could be next, 5 years could be up another 100% from here.
Yeah, but I guess it depends on the global cycle. I mean, emerging markets are great when you get the right point of the cycle, or the wrong point in the cycle, and it's all overridden.
Yes.
So what else are you looking at on the horizon of the big picture stuff? And then we can go into some of the more specific opportunities as well. Well,
the populism is still, it's an old trade in some respects. It's had cycles. You had that first cycle in 2016 with Brexit and then U.S. with Trump. But now, you had this, the globalists were very empowered by the Macron election, because when he was elected, it really looked like populism was going to be at least contained in Europe. But now...
He looks like he was the outlier, in fact.
Yes, exactly. And at the time, that's the amazing thing about the street was lecturing us that this whole movement was dead, right? This whole populist movement. In the summer of 2000...
Because people wanted it.
What's that?
It's because they were imposing their wants,
exactly.
Their desires.
That is... And you've been picking up on this for years, is you see these research reports that and Trump brought it out in people, and it's very popular around the world today, is that research is driven with the political bent, where it really warps the reality of the research. And so to us, we want to do trips to Italy, more trips, and meet Salvini's team. So we'll take clients over there. So I think that the situation with Spain is fascinating, because Vox is now, if you look at Europe, AfD in Germany has gone from 3, 4, 5% in the polls to high teens. And this is, these guys make Trump look like Mary Poppins, right? On terms of immigration.
Yeah.
So, and then in Vox is now in Spain is now rising, and in Italy you've got obviously the Liga and Five Star. So the whole thing is coming together, and you've got you've been talking about Brexit.
But they're all bifurcating as well. So there's
yes.
There was an explosion in the left, in the hard left, and
yes.
an explosion in the hard right. And it's happening everywhere.
Niall Ferguson has been on top of this, and if you look back through the history of capitalism, there are what's called a debt jubilee period.
Yes.
And there's a number of people that have been starting to, Ray Dalio is kind of hinting at this, but you're right. You've got this, the left is rising and the right is rising, and the left especially is very anti-creditor. So if you're in the left wing in Europe and you're a millennial, you see the baby boomers of Europe have saddled these countries with debt. And these young people are looking at this debt load and saying, over time, each year that goes by, you know, I don't, at some point, there's going to be a movement strong enough to walk away from that debt. And that's, if you look back through the history of capitalism, maybe you can explain a little bit too, but for the last, going back in the Bible, there's references to debt jubilees. It's a debt reset. And I think that's what we're heading to in the next, I think anywhere between 2 to 5 years, to be some type of debt jubilee or debt reset.
I actually agree with that too. I think David Zervos has been talking about this as well. I think Japan's probably the first place to look at it because they're more advanced with this whole debt cycle. And the point being is the central bank already owns 60-odd% of the debt.
Yes, yes.
So at what point do the central bank in the next recession just end up owning all of the debt and then saying, what debt? It's gone, right?
Yeah.
That accounting trick.
What they call it, a coin? You create a coin and do it.
Yeah, whichever way it's done,
Yeah.
that accounting trick is a debt jubilee, essentially.
Yes.
Because you say to the government, okay, that debt's written off now, the central bank own it, we'll call it quits. There will be obviously some repercussions. What that is probably the currency collapses. But it seems to me that we can't get out of the problems we're in, both the political problems or the economic problems we're in, without it. With an aging population, with more debt, there has to be some sort of debt jubilee. What that means is terrible to be a creditor.
Yes.
Anybody with savings gets killed, but you know, in the world of the 99% and the 1%, it actually appeases 99% of the entire population when that happens. So it's a really odd situation. As you say, it could easily happen.
And Alexis de Tocqueville, and there's a number of, I mean, his life is I think a Brit in the Scottish, and then through his life, he wrote a lot of works, and there was a number of people like Alexis de Tocqueville that in the 1700s, 1800s that talked about the cycles of capitalism, where you start off really in a bondage period because you're a period where the U.S. was essentially contained by the U.K., then a patriotism, entrepreneurship, and then a flourishing abundance stage. And there are these stages that he talks about. And this work is almost close to 200 years old. But in the end, there's the apathy stage, and then you're back to bondage. Because at the end of the day, when the voters realize they can vote themselves largesse from the public treasury, and that kind of left wing or that right wing extremists impair the debt, which we've seen in Venezuela, we've seen to a large extent in Argentina many times. There's this cycle. And it's pretty clear that if you look at the U.S., we're moving into that apathy, those later stages as we move to the rise of the left in the U.S.
And I think Neil Howe's Fourth
Yes.
Turning also alludes to this kind of thing. There was a phase to this, and I don't know how long this phase lasts, how long the political instability and how extreme it gets, because it could get to several forms of war. Because if the US pulls out, something I've talked a lot about, the US pulls out of the world political order, which it seems to be doing right now, it leaves an enormous vacuum because the Europeans are too busy trying to sort out their massive problem, with the UK pulling out, creating a vacuum there as well. There's kind of vacuums everywhere, and it leaves kind of Russia, China, and other players like Saudi, Iran, and Turkey to kind of figure out what they want to do, because who's going to stop them? I mean, Saudi can murder journalists in Turkey, and nobody does anything about it. The Chinese are murdering people all the time. They've got concentration camps, but yet nobody will do anything about it. The Russians are killing people in London, yet nobody will do anything about it. So that tells you that everyone's free to do whatever they want. And that worries me, because that could lead to war within that.
And the U.S. really debt sustainability, I mean, if you look at entitlements and interest, we're up to 62% of the budget. Whereas it's years ago, defense spending versus entitlements was larger. Now entitlements and interest on the U.S. debt is so much larger than defense. And you have to say, if 62% of the U.S. budget is entitlements and interest, defense is going to get crowded out. And I think that's what expresses itself through Trump is starting to see that. Now, granted, Trump is definitely increased defense spending, but in terms of the U.S. being, like you said, the global policeman, there's no way that's financially sustainable anymore if your interest costs and your entitlements are already 62% of the debt compared to 50 years ago. They were both those two combined were 28 to 30% of the debt.
Yeah. So let's pull on the thread a little bit about the populism. So I think what you said was interesting is there's a potential between the hard left and hard right to really not care about the creditors somewhere within this. And that leads me on to the European banks and who's going to save these guys in the end? And how's that going to play out? Because are they going to have to go into the public sector? I mean, the German banks, there's the German, the Italians and the Spanish I'm really worried about right now. And how is that going to play out? I guess it depends what political party. Are they just going to write them out and just blow everybody up? Are they going to supposedly bail in the creditors, which is what the rule was set? But I don't imagine the Germans are ever going to do that with Deutsche Bank.
Yeah.
Or are they going to take them over as government entities? How do you see that play out? Because if we're talking credit special situations, that's probably the biggest one in the world that I see.
Well, if you think once again, you think of the cycles of democracy, that bondage to patriotism, to abundance, and then back to bondage. We look right there, Venezuela's in the bondage stage, right? So the Venezuela will probably transfer in the next 6 months to 9 months to a new stage, moving out of bondage into maybe that new form of patriotism, kind of where I guess you could say where Argentina is right now.
Right.
But Europe, if you talk to people in the White House, and I spend a lot of time on the Hill, after Lehman, there was a conversation or two about a real debt jubilee moment. But in the end, and there was literally conversation in the White House between the Obama people and Treasury and the Office of Management and Budget. And in the end, in that small room in the Oval Office, they discussed, and the argument came down, we have to protect the banks, because if you let the banks go in the United States and you cram them down because they own all this debt, then you have a depression. But we've already been through this, and to your point, we've been through this in Ireland, we've been through this in Europe, and now at some point when you go into the second round of the next crisis, that's when the banks probably take more of a hit, and that's where you're getting at, and that's why. Here's the amazing thing. There are banks in this world, in Canada, that are trading at 2.5 times book. And SocGen, Societe Generale, BNP are trading at 40% a book. This is craziness. I mean, what is going on in this world? And that's pricing in some type of, that credit rating. You look at France CDS is moving up. It's not crazy, but France CDS is substantially wider than Germany compared to where it was like 6 months ago. Something's going on there. So I think, number one, I think the Canadian banks are overpriced. But why do you have this drastic difference, 2.5 times book versus 0.4 on SocGen and BNP?
The question is are SocGen and BNP even worth 40% of book?
Well, that's the thing.
I don't know. I don't know how you value book any longer.
Yeah.
And I know SocGen, as you know, SocGen, it is an enormous derivative house, of which I don't know what the black holes are in that. And so is BNP, because they use they have huge derivative books.
When you trade, as my career in trading distressed and high yield, and the equity investor watching us right now, so many equity investors don't understand. Like in the case of Deutsche Bank, the equity might be like 16 billion. but there's hundreds and hundreds and hundreds of billions of debt. And like you said, off-balance sheet debt, derivatives. So you're talking about potentially the sliver of equity in Deutsche Bank is this. And people look at the stock and like, oh, I can buy the stock at $12 or $11. But you own this little tiny, think of a pie. You own this little tiny sliver, and all of the rest of the pie is senior to you. And you really, at the end of the day, like to your point, if it's price to book, it looks cheap at 0.3 times book, right? At Deutsche Bank, maybe 0.2 for Deutsche Bank. Oh, it's cheap. But, oh, by the way, look at the pie.
Yeah, yeah. And what's in that pie?
Yeah, what's in that pie?
If that pie's toxic as hell, you don't want to. You don't even taste of it. So, where else is interesting to you, or what else is interesting to you? What's on your radar screen right now, investment-wise or opportunity-wise?
Spending a lot of time on electric vehicles. What I like in cycles is, if you look at the .com, there's this period of any new trend, any new massive social economic trend, whether it be, say, the internet.
Yep.
What happens is the fast money equity people come in and they bid everything up. Buffett talks about the 3 I's, the innovators, and then finally the idiots, right?
Right.
So the 3 I's. And so you have this innovation stage where the money comes in.
Yeah.
And similar to crypto. And then if you look at Amazon stock, Amazon priced in 15 years worth of earnings in 1999, 2000. So you had stock went from 100 and whatever it's 100, 150 to I think close to $1, and then back to through 2000. So this, we look around the world, and if you look at electric vehicles, this has already happened to some extent, not as vicious as, say, the .com, but you had a lot of companies in that electric vehicle space that, in the mining, lithium, cobalt, these critical commodities that are mathematically unsustainable. Like, we need literally a tremendous, what I mean by is the current amount of them on planet Earth is unsustainable relative to the demand of electric vehicles.
Yep.
We're selling 1 million electric vehicles a year now in China compared to 200,000 5 years ago. So the large trends, what we look for, the bear traps report is, okay, you're coming out of the euphoria stage, and then you're down on impatience. And then there's that, we've seen this so many times, there's so many different trades. Up on euphoria, 10 years of goodness gets priced in, down on impatience. And what we look for at the bear traps report
I kind of think the cryptocurrency world's in that impatience phase.
Yes.
We had the euphoria, we've now gone into the impatience. It's like nothing's ever going to happen from this. And then eventually out of this.
Oh, it's going to explode out, and there'll be different players that can
and
survive.
whatever it is, a different format. But
it's all blockchain. It'll be like J.P. Morgan's back office will be completely like they'll be settling trades in like 2 minutes, 10 years from now, right?
Yeah.
Like, right? How long does it take to settle a bond trade?
Yeah.
Right. Like 3, 4, 5 days. I mean, it gets. But over time, with blockchain, you're going to be able to settle that trade. Like both counterparties.
This is the overstock story.
Yeah.
This is what people are interested in. Sorry, I interrupted you there.
No, just what we look for is that the bear traps report is that really that new bull market, and so we did a pretty good job on solar names last year, the year before. We looked for that, and this past year we're doing a lot of work on natural gas, and so we're looking at just the demand for electric vehicles and nuclear power in the world. Is just massively. China has to at least 30. They need if China doesn't produce 30 new nuclear power plants, the entire Paris Accord is a complete fraud, because it's the dirtiest air on Earth. The percentage of electricity that's produced coming out of coal. I mean, people. That's the thing that drives me crazy about the Davos crowd. There's so much attention on the U.S. and the dirtiest, most viciously pollutive companies and countries are in India and China. Mm-hmm. And they get this free pass in Paris. Mm-hmm. And you know what, you can say what you ever say about politics, but guess what? There's a trade there, because they may have a free pass now, and that's empowered some people politically, but there's a mathematically unsustainable. That free pass is over in 2 years.
But I think China have acknowledged that.
Yes.
India probably also. China are faster. Their whole thing is about renewables and cleanness and everything. they understand that you can't destroy your environment any longer.
Yes, that's why you need 32 nuclear power plants.
Yes.
And then the trade is your natural gas and uranium, because China and India, the amount of natural gas and uranium, the demand, we've had this huge amount of natural gas that's been found in the U.S., mainly because of the Fed, right? Fed kept interest rates so low for so long. Billions went into the Bakken, and they found all this natural gas. So all of a sudden, we're sitting on all this natural gas, no buyers. Now, this LNG is changing the world, where next 5, 10 years, the floor price for natural gas is going to be maybe 50, 60, 70% up higher from here. Same thing with uranium. Both of those sectors in natural gas.
Why with nat gas when there's so much of it? I mean, people are just tripping over nat gas everywhere.
Well, like in these other economies, these power plants are going to have to be nat gas, LNG, nat gas fueled. So,
but, I mean, Russia's got so much of the stuff, and there's so many places with nat gas. I can't construct a bullish argument for nat gas prices outside of supply restrictions that come periodically.
Yeah,
uranium, yes. I mean, this has been a big theme for a lot of people, I think.
Yeah, it's a harder case to make with nat gas, but coal is just so unsustainable.
Yeah.
And the other thing is nukes. You still have that political element.
Yeah.
So, Trump is the one thing about the Trump administration. They know the U.S. can't compete with Russian natural gas, but they're using NATO as leverage. Look at this Nord Stream deal, right? So the Germans have this natural gas deal with Russia, but the U.S. is saying, oh, by the way, we're basically giving Europe this X amount of billions of dollars a year in NATO funding. If we're going to keep that level, you're either going to have to raise your defense spending or buy our natural gas. So in that respect, you're right. There's too much of it. It's uneconomical, but Europe may be forced to buy a lot more. And Poland's already leaning this way. Trump's been over to Poland like 3 or 4 times. And from what we hear, there's a deal there in natural gas is actually linked to defense, which is crazy. This is like 21st century.
Wow.
Animal House. Animal Farm.
So also in the electric vehicles, so where's the opportunity within that?
Albemarle, the big producers in Latin America. There's this like triangle of countries, of regions that really where most of that lithium's coming from. But Albemarle is really an anchor tenant position. There's the ETF, which is the LIT ETF, which is a lithium ETF. There's cobalt companies. There's BYD, the electric vehicle company that Charlie Munger. Great story. I've got to tell you my Charlie Munger story. But Charlie told me about he invited me to Omaha. My book came out in 2008-09, and 2011 he invited me to Omaha to come and see that Berkshire Hathaway annual meeting, and I ended up going to a number of those annual meetings. Any investor watching us right now, you have to, first week in May, you have to, while these guys are still healthy and just incredibly functioning, you have to get there. So I bring my wife there, and we get off the plane, we do the cocktail parties on the Friday night, and the next morning, on Saturday morning, we're in the Quest Center. There's 32,000 people there. And Buffett and Munger, now remember, I was a former Lehman trader. Buffett and Munger start answering questions from the audience. And this is going on like an hour and a half. And I look over at my wife, I'm getting the death stare. She's hungry. And I'm like, I shouldn't have brought her on this trip. It's an investor trip.
Yeah. This was for you.
Yeah. And she's like, honey, I want to get some lunch. I said, and I leaned over and said, what would you like for lunch? She said, oh, I'm really in the mood for, New York gal. I'm really in the mood for some sushi. I said, hey, we're in Omaha, Nebraska. The last thing. So the next morning, we walked through the foyer of the Marriott Hotel. We were supposed to meet one-on-one. I'm meeting Charlie Munger at 9:30. And as we walked through the foyer, there's Bill Gates in one room with the sovereign wealth funds. There's Buffett, another room with the pension funds. And just this great group of investors in the lobby. And everybody you talk to is just it's like a lot like this conversation. Just a lot of really incredible people that I respect, and really investors. Someone that's been in the Buffett Berkshire equity for 20, 30 years. I mean, that's a very interesting person.
Yeah.
And so we're in the room, and I say to my wife, I said, Annabella, I only have 25, 30 minutes with Mr. Munger, so please just say hi and then, just gracefully leave. I didn't want to be too aggressive. But just so Charlie walks in and he meets my wife and she's leaving and he said, I just want you to know hardship is good for you. And I said, Mr. Munger, you're one of the richest men in the world. What do you know about hardship? And he said, years ago, and he told the story on stage too. Years ago in the 1950s, he had a law firm. One day, 8 lawyers walked out the front door. And he woke up in the middle of the night, looked up at the ceiling. He said, honey, if I lost everything, would you still love me? And she said, I'd love you, but I sure would miss you. And I said, Mr. Munger, you're one of the richest men in the world. What do you know about hardship? And he just the most inspiring man I've ever met. The burning desire of Charlie Munger every day to get up and get smarter is something to behold. And when you live through your whole life, and I just turned 53, you realize how much time you have. And as a young person listening to us right now, there's nothing that can stop you if you just keep that burning desire to learn, to break through those walls, and get smarter every day, get smarter at your focus craft. And that's what Charlie Munger's life is all about. He's one of the most successful investors the world's ever seen.
So to loop back in the electric vehicle thing, he's invested in
BYD. So
right.
He convinced, around that time, Mr. Buffett, who's not really a big technology fan, even though he's the largest shareholder of Apple now. But it's fascinating to see that vision. They were way out in front. If you look at their cost basis on this BYD equity, I think they own 20% of the equity now. But their cost basis, they were in there way early. And within China, it could go really well for BYD because as the Paris Climate Accord gets priced, as they enforce it in China, the companies with the highest standards or the highest, the electric vehicles with the best performance and standards are going to get more credits, more receptive and more push from the government. And so I think that's why, that's number one, that's not their original thesis, but that's why I think they're very happy with that position because that's an equity that could be up 5, 6, 10 bagger from here.
So you'd like to be long that and short Tesla?
Yes. Well, I think the Tesla thing is fascinating because as a former distressed trader, high yield trader, I've never in my life seen a $50 billion equity market cap. Like, think about this. I've never seen a $50 to $55, $60 billion equity market cap. So that's equity on an 8% or 7.5% coupon high yield bond in the same company. It doesn't make any sense. So it's just a classic tails, right? So you've got the equity people that are playing this one tail, and the high yield people, the bond people don't buy it because if they were buying it, the bond would have the coupon or the yield of the bonds would be well below 5%.
The bond guys, I think, are saying he's managing the company as if it's still a VC-funded firm.
Yes.
So they're saying, but it's a public company, so you're going to run out of cash.
Yeah.
The equity guys are saying, yeah, but look at the upside. And they're also thinking like VC guys, thinking, yes, yeah, but there could be a 10x here. And it's not, I don't think it's possible in the public markets for this to happen.
I've never seen, maybe you could point one to me. Typically, you don't see $50 billion equity market caps and a coupon that high. Like normally,
so why is that not the trade then? Is just to buy the bonds and sell the equity, or?
Well, that's why there's the converts. Now the problem is the converts, they're unsecured, and the senior secured, and then there's other pieces of debt that have a claim on Tesla's prize assets, that the big property plant that they have out on the West Coast. So and then now the assets that they're developing in China. So the converts could be a great play, but it all depends on the recovery risk because the bond's at par, right? So think going back to the convertible bond. The Tesla bond is right around par. It may go to, that's 1,000. It may go to 6,000, like to your point. That's your equity component. But where's your recovery if it's an unsecured convert with all this like bank debt, and all this other debt on top of it. Maybe you have 50% downside, but net you have 600-700% upside. It's a lot better deal than the equity.
Yes.
So I'd still rather own the Tesla converts, but net I'm negative on the equity. And our work shows that, and as there's a lot of, we did a beautiful report that's up on Real Vision, but it's the amount of, you're talking about $400 or $500 billion of investments from German engineering, Volkswagen, BMW, that are coming at this company.
I keep writing about
this. Can you imagine this?
I mean, when you see what Porsche are launching, what Audi are launching, what BMW are launching, I mean, they're really going for this, and they've taken their time to get it right, so that the doors actually fit together and the car doesn't break down. And
best engineers in the world. Literally, like 30,000 of the best engineers in the world are coming at Tesla. But guess what? If you spend a little time on the Hill, Elon Musk is a genius politically. He spent a ton of time on the Hill. He really ingratiated himself with the Obama presidency and the subsidies. The American taxpayer, if they saw the subsidies in Tesla through that creation, the average taxpayer would just faint. I mean, it's just billions of dollars of subsidies. But guess what? He's very close with Kevin McCarthy. Kevin McCarthy's in the House Minority Leader. And you've got this 232 coming out of the Trump administration now, and they just announced on autos, the auto tariffs, they just announced the plan on February 17th, but they haven't given the details. Lo and behold, there'll be some protection for U.S. electric vehicles, I think, coming out of that White House plan.
Really?
So because think of like you're Elon Musk. You know this 20,000 German engineers are coming at you. You know there's $200-300 billion of investment that's coming at you in the electric vehicle space coming out of Europe. To your point, the Porsches, the most incredible Porsches are coming out. The only way you can survive is if you get your boys in Washington to protect you with tariffs for the next 2, 3, 4 years.
I thought this government's supposed to be anti-tariffs.
Yeah. I think that if you look at 232, it won't be, and this is, remember, we're talking about the U.S. auto tariff agenda that's coming out. And it'll be much more of a sniper fire than a shotgun. So the tariffs, like the markets, so this is why we did a report on BMW. The spread between BMW equity and GM is 2 standard deviations outside the norm going back 10 years. It's never been this cheap to GM, ever. So I think German cars could be a real, German auto, like BMW equity could be a real buy here, because at the end of the day, it's a lot like Mexican equities. Trump gets elected. He makes all this news on the wall. Mexican equities drop 50%. We were buying them for clients because the Trump bark a lot of times is worse than the bite, and the media coverage on the bark is so profound that these vicious sell-offs occur. And at the end of the day, you've got all this news on auto tariffs, all this negative news on BMW, and if they come up with selected tariffs that won't hurt BMW as much as what's been priced in, you're talking about a stock that could be up 60, 70, 100% over the next 3-4 years.
Well, the other way of looking at it is that when I look at car sales around the world, they're collapsing.
Yes.
The US is also slow, not the end of the world yet, but it seems to be slowing down. What happens if it's just GM that's massively overpriced?
Well, there's some pretty impressive investors that have stakes in GM. Like to me, I just love David Einhorn and his career, even though he had a bad year last year. The work that some of these investors that have done on GM, their incoming entrance to electric vehicles in China, the growth, the potential deal with GM and I think Amazon. There's all types of disruptive forces that could eventually help GM, but you can make the case that we don't really have a strong opinion on GM equity, but I do think though it's
because I'm just thinking maybe again, like we were talking with the Tesla one, maybe the smarter thing here to isolate the actual risk and opportunity outside of the macro is to do the long short, the pairs trade.
Yeah, Because
if it's 2 standard deviations
Yes, no, exactly. I see. If you're short GM and long BMW, yeah, that's going to normalize. That'll work for sure.
Now, whether it happens
I
that GM share price falls or BMW rallies, what you're taking is the market risk out of it.
Yeah, take a look. There's an HS screen on Bloomberg, and you pull it up and you look back, and it's just we've never seen. That gets back to that politics. That's why I think the political element of research is so important, because whether it be elections or whether it be tariffs or whether it be the noise is so loud from the press, and remember, there's a disruptive element in the press. BuzzFeed out of business, right? The New York Times had financing from Carlos Slim, which potentially saved the company, and now the company's flourishing. The point is that the U.S. media is being massively disrupted. So the clickbait, the ability to issue a story and get eyeballs on it is now much more important than it ever was before, because of these really historic disruptive forces in media. So what that means is there are these trades that get viciously, and we have a capitulation model that measures capitulation. We look at these different sectors. Is this a category 3 hurricane capitulation? And you can mathematically quantify the capitulation. And what we found, especially with Mexican equities, with Brazil last year, ahead of that election, the stories about Bolsonaro in Brazil, and they made this guy, this guy looked like Darth Vader coming in, and equities, and then you had a bunch of things going on in Brazil at the same time, with trucker strikes and everything. But the bottom line is the negative narrative, because of this media disruption, I think is profoundly expanded, more so than it ever existed 5, 10, 15 years ago. So what happens is the capitulation process and this vicious bear market can be so severe, and the exiting, and then sure enough, lo and behold, these produces a fantastic bull market. Brazil equities are up since October, 30, 40%, 35%, and the U.S. equities are flat. So you've had 35% outperformance of Brazil versus the U.S. since October, all because of this whole, this politicization of information.
So just as a final thing.
Sure.
Where's the next big political opportunity?
Well, it's definitely Venezuela, but it won't be tradable for a while, right? So then we have to look at, around the world.
What about Europe? Does anything change?
I think that there'll be, in Europe, you could have a situation with Merkel where if she exits, your German equities are so cheap to the U.S. I think you can go back 20 years. They're one of the cheapest they've ever been. And what we look at for the bear traps report is like multiple levels of capitulation. So you've got a capitulation. Remember German equities. There's a decent chunk of them that are exposed to autos, right? Mm-hmm. So that's part of it. And then you have the potential Merkel exit. You've got all this problems in the periphery. So German equities relative to the U.S., if you buy German equities now and hold for 5 years, I think you're going to be in a pretty good spot to some extent. Now, the banking situation is an overhang, but it's very well known, and maybe that plays out over a longer period of time. But maybe over the next 2 years, that could be the real situation. Because think about it, they're also, European equities, especially Germany, has been crushed by this Trump trade drama with China, because you're talking about Germany's largest trading partner. And today we just saw manufacturing PMI down with a 47 handle coming out of Germany. I mean, they're in recession. Yeah. So these stocks are cheap, and the risk reward in German equities, I mean, you've got a Merkel exit priced in, you've got a China potential recession that's been priced in over the last year in the German equities. You've got all this political risk. You've got the Trump trade tariffs. I mean, you're talking about every sane investor has been knocked out of Germany. There's nobody left to sell.
Fascinating. Larry, really fascinating conversation. I think people are going to get a lot out of this, and hopefully some thinking and some inspiration as well. So just thank you so much, and
it's a pleasure.
Look forward to seeing more of you on Real Vision.
And you've been a great inspiration to so many of us on the street, and I love your quality of life.
Thank you.
Good to see you.
Good to see
Thanks,
you.
my friend.